Well, the federal and Ontario governments announced subsidies for Volkswagen and Stellantis LG Energy Solutions this year to entice them to build electric vehicle battery plants in Canada. Now, the Parliamentary Budget Officer says it will take 20 years for the government to break even on those investments. For more, we are joined by Yves Giroux, the Parliamentary Budget Officer. Thanks so much for making time for us today.
My pleasure.
So your goal here was to find this break-even timeline for these investments that total about $28 billion altogether. And I just wonder, firstly, you could just tell us a bit about how the payoff even works in this scenario. How does the government make back the money?
Well, the government makes back some of the money, at least, by income taxes paid by the workers who will be employed by these plants, and the spillover effects in the economy, especially the regional economies. And that's how the government will recoup at least some of its money in a couple of years or several years, depending who you're listening to.
Right. Okay. So at the beginning, when the federal government was talking about just the Volkswagen investment, they were talking about this payback happening, break even happening within 5 years. Now, you dug into what they looked at in order to come to that conclusion that 5 years would be doable. Can you tell us a little bit about what they took into consideration?
Sure. So they based these statements on a Trillium Network report that looked at the potential impacts of establishing battery plants, Stellantis, and eventually Volkswagen. And they also assumed in that report that this would lead to the creation of a made-in-Canada supply chain from the mineral exploration right up to the recycling of these vehicles at the end of their life. So the assumption there is that this subsidies for these two plants would lead to the creation of a Canadian EV vehicle manufacturing from, as I said, from the extraction of minerals to battery plants to vehicle assembly. And we found that a bit strong in terms of assumptions. And they also assumed that it would all be incremental to the current activity in the auto sector, which, again, we found was a bit optimistic, to say the least. So that's why we started to look at the numbers, and we decided to do our own analysis, because as people know, the auto sector is a highly integrated sector in North America, with parts making their way across the border several times when a vehicle is finally assembled between Canada, the US, and Mexico. So we found it very optimistic to assume that this would lead to a sector or a network effect sufficient that everything will be made in Canada as a result of these subsidies.
Oh, that's interesting. Yeah, because the sort of system or the network across borders already exists for a lot of this, not EV related, but I mean, I suppose why not? So what did you end up stripping out in your consideration? And then you got to this 20-year timeline instead.
Yeah. So we looked at the impact, the fiscal impacts of these subsidies themselves, without assuming that everything would be built in Canada, but also without assuming that everything else would cease to exist, like traditional vehicle assembly. We did not assume that it would cease to exist either, to balance the assumptions. And we found that the subsidies themselves, if the plants run at 100% capacity, even after the subsidies are phased out, which is right after 2032. So the subsidies will be phased out after 2032. So we assume that things would continue to run at full capacity in these plants. And we found that the tax revenues for the government would make up for the subsidies after a 20-year period, so in the 20th year of the operation of these plants, which is significantly different than the less than 5 years that the government has been stating.
And is your 20-year timeline, is that a best case scenario or sort of the mid-range? Where would you put it?
I think it's probably a mid-range, but it's hard to tell because it depends it's highly dependent on whether there will indeed be the development of a Canada sector where the battery plants will rely solely on Canadian components, or whether some of these will be sourced from outside, from the US, from Mexico, even from China for some of the minerals and metals. And it also depends if these batteries will still be the batteries that power electric vehicles in 10 or 15 years, because it's a field that is still evolving quite rapidly. So it may well be a situation where the materials that enter into the battery components or the batteries themselves change completely in 10 or 12 years.
Yeah, it can.